Global equity markets recorded another positive month in September. Despite the volatility in markets and headlines about trade wars and Brexit, sterling investors in global shares have enjoyed returns of over 18% this year. Splitting those returns into earnings changes and multiples of those earnings that investors are prepared to pay, year-to-date returns have been driven by a rebound in those multiples of earnings that investors are prepared to pay. This was partly a reversal of the sharp sell-off in equity markets in the fourth quarter of last year. Full-year earnings estimates for global stocks are actually down year on year. A large part of this willingness to pay in terms of multiples has been driven by the influence of bond markets. Negative yields on government bonds in Japan and Europe and declining yields in the US have increased the relative value of cash flows that corporates can generate and that can be accessed through equity markets. The dividend yield on the global equity index is currently significantly higher than on the 10-year US government bond. There is also the potential upside of capital appreciation and inflation protection that investments in equities offer. We invest in a number of businesses where, despite some inevitable cyclicality in the economy and volatility in share prices, the demand for the products and services that the companies offer will endure. The French-listed aircraft engine manufacturer Safran is a good example of this. Safran have launched a new short-haul aircraft engine that's more fuel efficient and quieter than the previous generation of aircraft engines. This is the most efficient engine for airlines to fly, as it helps them lower fuel costs through being more efficient. As long as people keep flying, Safran will continue to generate strong cash flows from these maintenance contracts and the sale of spare parts. The annual total number of passenger miles flown globally has only declined on 2 occasions in the last 30 years. We think that this positive trend will likely persist, giving us confidence that the cash flows that Safran can generate are secure. We use our established investment process to identify companies like Safran that provide good products and solutions for customers, where demand is likely to persist, and importantly, where we can buy shares in those companies for an attractive price.